On in last class, we have done which one? Retirement of a partner. In case of retirement of a partner, what are the steps we used to follow? First one, we see which ratio. Listen, old ratio, new ratio, and which ratio? Gaining ratio we see first. Then we adjust for which one? Goodwill. We consider goodwill. Two methods we had seen. What are the two methods? Either raise the goodwill and write off. It is only for goodwill. It is only for goodwill. Raise the goodwill and write off. Or adjust through which account? Partners, capital account. Those steps are same. In case of retirement or death also, it is going to be what? Same. Are we getting? Death of a partner. In case of death of a partner also, the first step is same. What do you mean by first step? At old ratio, new ratio, and which ratio? Gaining ratio. Adjustment of goodwill is also same. Goodwill, there are two methods in which you can adjust. In case of death of a partner, clear, the deceased partner's goodwill will be either raised and written off, or it will be adjusted through which account? Capital account. Don't repeat, just write, start. Death of a partner. Step 1, old ratio, new ratio, hyphen, same as retirement. Old ratio, new ratio, same as what? Retirement. Old ratio, new ratio, same as which one? Retirement. Step 2, old ratio, new ratio, same as retirement. Step 2, adjustment for goodwill. Adjustment for goodwill. Adjustment for goodwill, hyphen, same as retirement. Same as retirement. Adjustment for goodwill, same as retirement. What do you mean by same as retirement? What are the two options? One is raise the goodwill to all partners, write off the goodwill to what? Continuing partners in new ratio, or just adjust through capital account in which ratio? Gaining ratio. So this one is same as which one? Retirement. Next, step 3 is going to be different. Step 3, adjustment for JLP. Adjustment for joint life policy. This will be different. Adjustment for joint life policy will be different. So in case of retirement, what the firm will get? In case of retirement, what the firm will get? Surrender value. But in case of death of a partner, the firm will get which value? Policy value, right? Joint life policy, right? In case of death of a partner, the firm gets, firm means partnership firm, gets policy value. In case of death of a partner, the firm gets which value? Policy value. Now, what do you mean by policy value? Insurance policy value. Pay attention. Pay attention. Let's assume. Don't copy this. I'll give you time to copy this. Pay attention. I will give the title later. Look at the example. A, B, C. They are sharing profits and losses in 5:3:2 ratio. What is the ratio? 5:3:2 ratio. Insured for rupees 10 lakhs. Insured for rupees 10 lakhs. C died. C died. Now, how much the firm will get? Firm will get rupees 10 lakhs. How this will be distributed? How this will be distributed? This will be shared in which ratio? 5:3:2 ratio. For A, B, C, you will share it in 5:3:2 ratio. 5 lakhs, 3 lakhs and what? 2 lakhs. You will share this amongst partners in which ratio? Profit sharing ratio. This is called as joint policy. What do you mean by joint policy? single policy for all partners. Okay, or you can say joint policy for all partners. Even if one partner dies, the firm will get full policy value. Who died here? C died. What is his profit sharing ratio? 2/10. 5:3:2. What is the deceased partner profit sharing ratio? 2/10. For that, the company is paying how much? 10 lakhs. So firm will get 10 lakhs. That will be shared by A, B, C in which ratio? 5:3:2. If you look at who died in this, C died. But C is legal heir, will get only what? 2 lakhs. A and B will get how much? 5 lakh, 3 lakh. Why? Because it is an investment made by the firm. Any benefit from the firm's asset will be enjoyed by whom? All partners in which ratio? Profit sharing ratio. This is type 1. Now the risk is more in this policy. Why risk is more in the policy? If A and B want money, what they can do? They can murder C. If they murder C, what will happen? A will get 5 lakhs, B will get how much? 3 lakhs. Let us assume the insurance policy is 100 crores or 10 crores. Okay. So the deceased partner will get lower share. Our family kuttula. Then A and B will get what? 5 crore, 3 crore like that. The risk of the insurance company increases. So practically you won't find this policy. Examination point of view, you can find type 1 policy. Type 2. Now same thing I will take. ABC, what is the ratio? 5:3:2. Insured for how much? 10 lakhs. C died. But the insurance policy is taken. A's life through 5 lakhs. B's life 2.5 lakhs. C's life through 2.5 lakhs. Look at this insurance policy. Is it a joint policy or several policy? It is called as a several policy. What do you mean by several policy? The insurance is not taken on the joint life of all the partners. Each partner is insured for a different value. Each partner is insured for a different value. Now, if C dies, the firm will get what? First case, right? It is a joint policy. What is a joint policy? 10 lakhs. Even if one partner dies, the firm will get the full policy value. Even if one partner dies, the firm gets full policy value. In this case, who died? C died. Is it a joint policy or several policy? A 5 lakhs, B 2.5 lakhs, C 2.5 lakhs. Now whether the firm will get full 10 lakhs? No. The firm will get for A only surrender value. Which value? Surrender value. For B also surrender value. For C only what will be received? Policy value. Clear? So this is called as several policy. This is called as which policy? Several policy. Okay. Separate policy on each life of the partner. Okay. The firm will get what? Firm will get policy value for which partner? Deceased partner. And surrender value for others. This is type 2. Once again, I repeat. A, B, C. What is the ratio? 5:3:2. Insured for 10 lakhs. Who died? C died. But separate policy is there for A, B, C. This 10 lakhs is split into what? A 5 lakhs, B 2.5 lakhs, and what? C 2.5 lakhs. Let's assume a surrender value. Surrender value is 20%. Surrender value is how much? 20%. For A, is he died or surviving? Surviving. So 5 lakhs into how much you will get? 20%. 5 lakh into 20% 1 lakh. For B, 2.5 lakh. 2.5 lakhs into 20%. 50,000. For C, policy value you will get how much? 2.5 lakhs. So what is the total you would receive? 1 lakh for A's life, 50,000 for B's life, and C's life how much? 2.5 lakhs. What is the total you will receive? 4 lakhs. Wait for a minute. This 4 lakhs, what they will do? This 4 lakhs, what they will do? It will be shared in profit sharing ratio. Shared in which ratio? Profit sharing ratio. Don't think, okay, A policy, A will get 1 lakh, B policy, B will get 50,000, C's policy, C will get 2.5 lakhs. No. What is the total amount realized? What is the total amount realized? 4 lakhs. This will be shared by the partners in which ratio? Profit sharing ratio over the partners A, B, C. This 4 lakhs they will share it in 2 is to 3. Sorry, what is the profit sharing ratio? 5 is to 3 is to 2. How much for A? 2 lakh. B 1,20,000 for C, 80,000 like that they will share it. Once again, repeat, pay attention. There are two types of policy. What is which policy? Type 1. What is a type 1 policy? It is a joint policy. Yes. What do you mean by joint policy? Policy taken on life of which partners? All the partners. Single life policy on all partners. Even if one partner dies, the firm will get full value. What is the full value? 10 lakhs. Any benefit from the firm's assets will be shared by all partners in which ratio? Profit sharing ratio. Second case, is it a joint policy? No, it is a several policy. The firm will get which one? Policy value for the person who died. Others, you will get which value? Surrender value. Suppose in this example, ABC insured for 10 lakhs, but separate values are available. 5 lakh, 2.5 lakh, 2.5 lakh. Now, if surrender value is 20%, the firm will get for A surrender value, B surrender value, for C only which value will be received? Policy value will be received. Then the total amount will not go like A 1 lakh, B 50,000, to C 2.5 lakh like that. Here no sentiments, it is business, right? So what is the benefit from the asset? What is the benefit from the asset? 4 lakhs. It will be shared in which ratio? Profit sharing ratio. It will be shared in which ratio? Profit sharing ratio. So from this we understand in case of death of a partner only, the firm gets which value? Policy value. Joint policy na, full amount you will get. Several policy na, then for the deceased partner you will get which value? Policy value. For C you will get policy value. For others you will get only which value? Surrender value. Take it. So, in case of death of a partner also, what is step one? What is step one? Old ratio, new ratio, and which ratio? Gaining ratio. What is step two? Goodwill, same as retirement. Step three, joint life policy, you would adjust for which value? Policy value. Step 4, revaluation account is same as admission or retirement. There is no difference. Step 4, revaluation account is same as admission or retirement of a partner. We know when to prepare memorandum revaluation account. When to prepare memorandum revaluation account? When they tell you assets and liability value should not be altered. So step 4, revaluation account is same as which one? Admission or retirement of a partner. Credit the gains and debit the losses, transfer the profit to partner's capital. Shall we? Pay attention. Before we go for step 5, listen. Normally retirement of partner, when it will happen? Middle of the year, beginning of the year, end of the year. It can be at the beginning of the year or what? End of the year. They will prepare final accounts and they will say the partner is retiring. That's all. Clear? They will prepare, for example, 31st March they close the accounts. They prepare the annual accounts, share the profit, and one of the partner will say, I would like to discontinue from partnership. Normally death of a partner will happen what? End of the year, not during the year. But what about death of a partner? It can happen what? Anytime during the year. For example, let us assume we prepared final accounts. We prepared final accounts on 31st March 2023. Okay, a partner died on, let us assume 1/7/2023. A partner died on 1/7/2023. How many months after preparing final accounts? April, May, June. How many months? 3 months after preparing the final accounts. What about this 3 months profit? What about this 3 months profit? You have to settle to the deceased partner. You have to estimate the profit of the 3 months. You have to, actual profit will be known only at the end of the year. You have to estimate which one? 3 months profit and settle to which partner? All partner or only the deceased partner? Deceased partner. Step 5. Start. Step 5. Profit share to deceased partner till the date of death. Profit share to the deceased partner till the date of death. How to calculate this? How to calculate this? From the last financial accounts or final accounts date till the date of death is estimated. Or you can say profit from the last final accounts date till the date of death is estimated. How to estimate it? They will give you instruction based on last 3 years profit, based on last 4 years average profit, or based on last year's profit, like that. As per partnership deed, they would have instructed in the problem. Clear? Profit shared from the last final accounts till the date of death is estimated. It is logical also, right? It is better to give the share only to the deceased partner. Journal entries, P&L suspense account data. P&L suspense account data are to all partners or only deceased partner. Step 6, prepare capital account. Okay. What about the deceased partner's capital? What about deceased partner's capital? Either you will settle it or transfer to which account? Loan account. It's not loan account, legal heirs account. You can call it as executor's account. Executor means legal heir. Then prepare the balance sheet. Capital account is same as admission or retirement. Prepare it. The partner who died, the capital balance will be either settled in cash or transferred to which account? Executor's account. At the end, you prepare what? Balance sheet after retirement. A deceased spelling. Where is it? எல்லாத்துலயும் மாத்தீங்க. Yes, 2 or 3 minutes, pay attention. In what way retirement of a partner and death of a partner is different? Step 1, the same. Step 1, old ratio, new ratio, gaining ratio, the same. Treatment of goodwill, either raise and write off or adjust through which account? Capital account, it is the same. Joint life policy, in case of death of a partner, you get which one? Policy value. Clear? If it is a joint policy, you get full policy value. If it is a separate policy, surrender value for the surviving members. For the partner who died, you will get which value? Policy value. Revaluation account also same as admission of a partner. This is a new one for us, right? Till the date of death, you have to work out the profit and transfer to what? Deceased partner's capital account. Then prepare the capital account. The deceased partner's capital will be transferred to which account? Executor's account. Then prepare the balance sheet after death of a partner. Pay attention. Since joint life policy involves separate treatment, we have to learn that separately. Take up this question. This is separately tested for about 5 marks in the exam. Treatment of joint life policies separately tested for about 5 marks in the exam. Shall we? Pay attention. Take up this example. P, Q, and R are sharing profits in 2:1 ratio. Joint life policy, rupees 25 lakhs. Surrender value 20%. Surrender value 20%. Insurance premium 50,000 per annum. Or died. Case 1. Joint life policy is already appears in balance sheet at surrender value. Joint life policy is appearing in the balance sheet already at what value? Surrender value. Balance sheet already we recorded which value? Surrender value. Now it's better to prepare a ledger account so that you will understand better. Joint life policy account. Is it an asset or liability? For us, is it an asset or liability? Firm, asset or liability? Asset. Investment made is an asset. To balance brought down. Already surrender value. What is the surrender value already recorded in balance sheet? 20%. 25 lakhs like what percentage? 20% how much? 5 lakhs already recorded. Wait, who died in this question? R died. Wait, is it a joint policy or several policy? 25 lakhs, is it insured together or separately on the life of each partner? We have not given separately. JLP is taken together. So by bank, you will get which value? Policy value. What is the policy value? 25 lakhs. The firm will get policy value. The balance will be transferred to partners. Which partner? P, Q, and R. In which ratio? 2:1 ratio. Any surplus from the firm's asset will go to all partners in which ratio? Profit sharing ratio. What is the benefit? 25 lakhs we realized, already we recorded 5 lakhs. What is the balance? What is the balance? 20 lakhs. This 20 lakhs you will transfer it in which ratio? 2:1. 20 lakhs, 2:1 hello. 8 lakhs. 8 lakhs and what? 4 lakhs. Once again, you repeat, pay attention. Who are the partners? PQR. What is the profit sharing ratio? 2:1. Together insured for 25 lakhs. Surrender value 20%. Insurance premium doesn't matter for us. That is an annual expense. Who died? R died. Case 1. Joint life policy already is appearing in the balance sheet at what value? Surrender value. So already we are recorded the surrender value. 25 lakh into 20%. It is like opening balance of asset. Same like land and building, plant and machinery. Two balance brought on already. 5 lakhs. On the death of a partner, the firm will get which value? Policy value. The balancing figure will be transferred to which partner? All partners in which ratio? Old ratio. What is the old ratio? 2:1. Wait panna. Suppose balance sheet surrender value not recorded now. Suppose if this is not recorded means what would have happened? This would have become 25 lakhs. Then you would have transferred that in which ratio? 2:1 ratio. Since already surrender value is recorded 5 lakhs, 25 lakhs is a amount you will get from insurance company. It is like profit on sale of the policy. Okay, all benefits will go to the partners in which ratio? Profit sharing ratio. Take it. Once again, any doubt in balance brought down? Why it is two balance brought down? Joint life policy is an asset or liability? Asset. Already appears in balance sheet. 5 lakhs. We get 25 lakhs. Transfer it in 2:1 ratio. Next, listen to case 2, then you can copy. If you not copied case 1 also, you can listen to case 2 and you can copy it later. Wait and understand. Look at the case 2. What is given? Joint life policy appears in balance sheet with which value? Surrender value. And JLP reserve. Na? Reserves will have which balance? Credit balance or debit balance? Asset will have a debit balance. Reserves will have which balance? Credit balance. By JLP reserve equivalent to the surrender value. We will maintain reserve equivalent to which value? Surrender value. If you tally this, what will you get now? If you tally this, what will you get now? 5 lakh, 25 lakh minus 5 lakh. The balancing for will be how much? 25 lakhs. This will be transferred in which ratio? 2:1 ratio. What is 2:1? 25 lakhs, 10 lakhs, 5 lakhs. First case, only surrender value appeared in the balance sheet. We got a policy value of 25 lakhs. The net benefit transferred to all partners in which ratio? Old ratio. Second, we already recorded JLP with reserve. Reserve also will be knocked off against the surrender value. Then whatever you are getting will go to partners in profit sharing ratio. Pay attention. Case 1 and case 2. Case 1 and case 2, are they joint policy or separate policy? 25 lakhs together for PQR. 25 lakhs together for which one? PQ and which one? R. Have we taken up case 1, case 2? Pay attention. Same example, let me to continue. Don't need to copy this. Okay. JLP is a several policy. On P rupees 5 lakhs, on R rupees 10 lakhs, and Q rupees 10 lakhs, or rupees 10 lakhs. See, the several policy need not be in profit sharing ratio. It need not be in profit sharing ratio. Okay. How much for PQR in this case? 5 lakh, 10 lakh, 10 lakh. Okay. Totally how much? Sir, why it is not in 2:2:1 ratio? Need not be in 2:2:1 ratio. Profit sharing ratio is only in which ratio? 2:2:1. Joint life policy can be in any ratio. No. For this, let me add case 3. Case number 3. Pay attention. In this case, wait pannunga. Joint life policy already appears in balance sheet at what value? Surrender value. Pay attention. Two balance brought on would have been the surrender value. All policy P plus Q plus R. What is the total surrender? What is the total value? 25 lakhs into eவ்வளவு percentage? 20%. 25 lakhs into 20% eவ்வளவு? 5 lakhs. Now, on the death of a partner, okay, it is a several policy. The firm will get what? Full 25 lakhs. No, what the firm will get then? For P, you will get which value? For P, you will get only surrender value. What is the surrender value? 5 lakhs into 20%. 5 lakhs into 20%, how much? 1 lakh. For Q also, you will get only which value? Surrender value, 10 lakhs into 20%. 10 lakhs into 20%, 2 lakhs. For R, you will get which value? Policy value. Full 10 lakhs you will get. So what is the total on the credit? 13 lakhs. Total on the debit? 5 lakhs. What is the net benefit? 13 lakhs minus 5 lakhs 14. Now what is the net benefit? 8 lakhs. This 8 lakhs will be transferred in which ratio? 2:2:1. So 3 lakh 20, 3 lakh 20 and what? 1 lakh 60,000. Wait pannunga. What is the difference between this one and first case? First case is the joint policy or separate policy? Joint policy. Case 3, it is a several policy. It is a several policy. What I request is, please take up this point alone. If, add the word if joint life policy is a several policy, that is on P 5 lakhs, Q 10 lakhs or 10 lakhs. If joint life policy already appears at surrender value, so the 5 lakhs now, by bank, you get 13 lakhs. As a balancing figure, we get 8 lakhs that is transferred to partners' capital and profit sharing ratio. So in the examination, if they give you only the policy amount, not individual life policy, then it is a joint policy. If they give you on different life of partners, each life of partner, that is called as which policy? Several policy. If it is appearing with surrender value, to balance brought down, the surrender value P plus Q plus R, 5 lakhs. With reserve it appears na, simple, whatever you recover by bank account, the balancing 4 will be transferred. 13 lakhs will be transferred in which ratio? 2:2:1 ratio. See, don't think too much on this. It's an investment. Already 5 lakhs, we realize 13 lakhs. Now benefit goes to all partners in which ratio? Profit sharing ratio. Investment is 5 lakhs against which a reserve of 5 lakhs is maintained means it is getting knocked off. In the 5 lakhs knock off. So whatever you are getting 13 lakhs, that will be going to partners in which ratio? Profit sharing ratio. And please keep it in mind, in case of several policy, for the surviving members, you get only which value? Surrender value. For the deceased partner, you get which value? Policy value. They ask you journal entry in the exam, it is easy to pass. For example, buy joint life policy. What is the entry you will pass? In the ledger account, we record buy joint life policy. Joint life policy account, we put buy joint life policy. What is the journal entry you will pass? Joint life policy reserve account data to which account? Joint life policy account. When we get money, bank account data to which account? Sale of asset money. Bank account data to asset. Bank account data to joint life policy. Transfer of profit, joint life policy account data to partners capital. Like that you can pass an entry. So let us recollect what is step 1. Work out new ratio and which ratio? No need to copy this. Step 1, what is it? New ratio and which ratio? Gaining ratio same as retirement. Step 2, adjustment for which one? Goodwill also. Raise the goodwill and write off or adjust through capital account same as retirement. Step 3 we learned now. Thoroughly we learned now, I hope. Treatment for which one? Joint life policy. Which value? We consider which value? Policy value for the deceased partner. Step 4, which account? Revaluation account, it is similar to or same as admission or retirement, record gains and losses. Step 5, what is the extra thing we learned? Profit share to which partner? Till the date of death. Till the date of death we work out. Step 6, what is the thing we do? We prepare which account? Partners capital account. Sir, what to do with retiring partner? Deceased partners capital? Either you settle it or transfer to which account? Executor's account. Then thereafter we prepare which one? Balance sheet. Now tell me, whether retirement is simple or death is simple? Retirement is simple because joint life policy and goodwill is adjusted for surrender value the same manner. There is no need to work out profit share of to the deceased partner till the date of what? Death. That is comparatively simpler. So in the examination, wait, which area the examiner will set question paper? Will they ask admission of partner? Yes. If I am given a choice, right, if you are an exam question paper setter, will you ask retirement of a partner or death of a partner? Death of a partner will be much preferred because it has some more adjustments to be understood. So examination retirement of a partner versus death of a partner, you will get more chance of getting which one? Death of a partner. Because all the adjustments are similar to retirement, two adjustments are extra. One is which one? Joint life policy. Second is which one? This profit share till the date of which one? Death of a partner. Now we learned all the steps. Now we can go to a comprehensive question. Have we taken up this? Take it up fast. Those who copied that, please come to question number 10. After copying this, please read question number 10. Shall we? Who are the partners? A, B, C sharing profits and loss in which ratio? 5:3:2 ratio. On 31st December, the balance sheet is given to us. Look at this. Asset side la parunga, joint life policy representing 10% sum assured kuduthirukanga. Then joint life policy reserve appears in which side? Liability side. So this is like this case we solved. Joint life policy appears in balance sheet which value? Surrender value. Surrender value is already given. Reserve is also already given. Two balance brought on, you will take which value? Surrender value by JLP reserve, like that you will take it. Proceed. General reserve is given, capital account is given, loan to C along kuduthirukanga, then cash at bank is given. There is an alignment error also. Okay, leasehold premises 20,000, patent 6,000, machinery 31,200, investments 3,000, stock 10,000, debtors 8,000, loan to C 1,000, cash at bank 4,800, cash at bank 4,800. Who died? C died. Look at the date of death. 1st May 2014. Balance sheet is December 2013. Balance sheet is given on what date? December 2013. How many months after the last balance sheet he died? January, February, March, April. 1st May he died. How many months? 4 months. For the 4 months we have to work out the profit share. That's what we had seen. Clear? Profit share to the deceased partner till the date of death we have to work out. From the last final accounts date till the date of death it is estimated. We will pass entry for this. While reading the question, all those things you have to take it in mind. Next, goodwill should be valid at 2.5 years, average 4 years completed before the date kuduthirukanga. So profits are given 2013, 2012, 2011, 4 years reverse, 2010, 4 years average profit you have to work out. Then point number B talks about revaluation. Plant is undervalued by, machine is overvalued by, leasehold premises is undervalued by kuduthirukanga. Then what is the next one given? C share of profit. Yeah, this is what? C share of profit from the closure of last accounting year till the date of death. Till the date of Death should be calculated based on what? How many years? 3 years. Simple. How many months later he died? January, February, March, April. How many months? 4 months later he died. That 4 months profit you have to work out based on 3 years average profit. Then investments are sold for 4,200. 6,200 is paid immediately. Remaining will be paid in what? 4 equal installments means it will be paid in the future. It will be paid in the future. Remaining will be transferred to loan account, executor's account, loan account like that. What is the old ratio? 5:3:2. Who died? C died. Any new ratio given in the question? If no new ratio is given, equal ratio எடுத்துறாதீங்க. If old ratio is not available only, equal ratio. Already 5:3:2 available. Third partner died, then the other partners will continue in which ratio? 5:3 ratio. Start. Please do it along with me. Step 1. Old ratio and new ratio. Who are the partners? What is the old ratio? 5:2. New ratio. If nothing is given, this 5:3 will continue. Step 2. Goodwill. Goodwill is valued nu kuduthirukkan. Goodwill is valued. Valued at எவ்வளவு years purchase? 2.5 years of 4 years average profit. So first let us work out the average profit. What is the average profit? 11,000 plus 14,000 plus 16,000 plus 15,000, everything divided by 4. What is the average profit you are getting? 14,000 is the average profit. Goodwill, 14,000 into 2.5 years. How much? 35,000 goodwill. Goodwill is valued at 2.5 years of average profit. What is the journal entry you will pass? Goodwill account data to old partners. Who are the old partners? A's capital account, B's capital account. You can put C's executor's account or C's capital account, no problem. How much goodwill? 30? 30? Balance sheet la பாருங்க, already goodwill இருக்கு. Already goodwill is recorded at how much? Be careful, already 5,000 is recorded. What is the new value? 35,000. How much you have to increase? 30,000. So everything is correct. Suppose if you don't read the question properly, then you may make a mistake of putting 35,000 here. Already 5,000 is there in the old balance sheet. So this will be transferred in which ratio? 5:3:2 ratio. Take it up, don't wait. They don't ask you to write off, so leave it. Goodwill account data to partners capital account in which ratio? Old ratio. Step 3, joint life policy. Joint life policy account. I request you to listen step 3, then you can take it up. Already we learned, but still pay attention. To balance brought down, already surrender value kuduthirukanga. What is the surrender value given in the balance sheet? Asset side la irukku parunga. Surrender value 1000. Surrender value 1000 da. By JLP reserve kuduthirukanga. 1000 given in the balance sheet. Both are given in the balance sheet. Now what will be the policy value? It is given that 10%. This 1000 is 10%. This 1000 is how much? 10% of a policy value. 10,000. So the firm will get policy value 1000 divided by 10%. Wait, is it a joint policy or several policy? Joint policy, because we are not given policy on the individual names of partners. So it is a joint policy. What totally how much you will get? 10,000. Tally this. The balance will be transferred to whom? A's capital, B's capital, and what? C's executors. In the old profit sharing ratio. What is the balance we get tally pannu? 10,000, transfer it in old ratio. 5,000, 3,000 and what? 2,000. Which account is over? Joint life policy account is over. This is like case 2 that we have done. What is the next step? Start. Step 4. Try panunga. Credit the gains and debit the losses, and the profit will be transferred to partners' capital. Already we have done 9 questions based on revaluation account. Credit the gains and debit losses based on which adjustment? Which adjustment talks about revaluation? Point number B, that talks about change in the value of assets and liabilities recorded. Any doubt in step 1? Old ratio given, new ratio becomes what? 5:3. Step 2, goodwill is valued at how many years? 2.5 years of 4 years average profit. Average is 14,000, so 2.5 years, 35,000. Already 5,000 in goodwill. So 30,000 raised. Joint life policy is same like case 2. Surrender value reserve rendume kuduthirukka. We get policy value 10,000. Balance is transferred to ABC. Revaluation account prepare pannu. Here adjustments are given in a different way. Adjustments பாருங்க என்ன கொடுத்திருக்கா? Patents undervalued by 2000. Patents undervalued by 2000. What to do? Will you put by patents or two patents? Patents undervalued by na balance sheet la undervalue பண்ணிருக்கான்னு அர்த்தம். Patents are found undervalued by 2000. Balance sheet la the value is shown less. Wait. For example, your land is 50 lakhs. I am telling you the land is undervalued by 5 lakhs. Then what is the value of the land, real value of the land? 50 lakhs plus 5 lakhs. Okay. So undervalued na balance sheet la undervalue பண்ணிருக்கான்னு அர்த்தம், you have to increase. So that's why solving multiple problems will give us this kind of thing. Patents, you have to increase the value. Balance sheet la undervalue பண்ணிருக்காங்க, increase the value now. Then what is the next one? Machinery in the balance sheet it is overvalued. You have to bring down the value to machinery. 3,200. Then leasehold premises undervalued, so you have to increase the value. How much leasehold premises? 5,000. Many people would have closed this way. No. Look at the point number D. Investments are sold for 4,200. Look at the balance sheet investment value. Investment value is how much? 3,000. Sold for 4,200. There is a profit. There is a profit by investment. Don't forget that. 4,200 sale பண்ணிருக்கோம். Cost is 3,000. What is the profit? 1,200. Once again, I repeat. Patents in the balance sheet is undervalued. You have to increase the value. Leasehold premises in the balance sheet undervalued. Now you have to increase the value. Machinery overvalued. Now you have to bring down the value. Investments were sold at a profit. Tally this and transfer to partners cap. Profit. Transfer to partners capital. How much it will be? 2,500, 1,500, 1,000. Goodwill only record பண்ணிட்டோம். Goodwill will never come in the revaluation account. Admission or retirement or death of a partner. Goodwill is always suggested what? Goodwill and JLP will not come in which account? Revaluation account. Method is called as the revaluation method, but it does not come in which account? Revaluation. Which partner died? Share of profit to C till the date of death. When the last final accounts was prepared, 31st December 2013. C died on 1st May 2014. 12 months. 4 months. 4 months from the end of last financial accounts. So this 4 months profit we have to estimate. How do they ask you to estimate? Look at point number C. C share of profit from the closure of last financial accounts till the rate of death will be calculated based on how many years? 3 years profit. How many years profit? Goodwill is 4 years profit. For this, how many years profit? 3 years, not take from the end. 15,000, 16,000, 14,000, only 3 years average. So 15,000 plus 16,000 plus 14,000 divided by 3. Based on law of 3 years profit சொல்லிருக்கோம். எவ்வளவு வரும் average profit? Based on law of 3 years profit, how much? 15,000. Pay attention. What is the entry we will pass? What is the entry I have given you? No சொல்லிருக்கேன். P&L suspense account data to deceased partners capital account you can put, or you can put executors account also. So P&L suspense account data, P&L suspense account data to which partner died? Cease executors account. How much you will put? 15,000. No. 15,000 into எவ்வளவு months? This is 15,000 is per year into 4 months. 4 by 12 into what is the deceased partner share? அவனோட share மட்டும்தான் தரும். 4 months profit for how many months? For how many months? 2 months. That is 4 months, 2 by 10. How much will come? 1,000 rupees. Only for the deceased member you settle now. Executors you settle now. This will appear in the balance sheet also. Till you prepare annual accounts, okay, this will appear in the balance sheet also. Once again, repeat. What is the last 3 years profit? 15,000 into 4 by 12. Why? 4 months profit. Why 2 by 10? Share of C. So P&L suspense account data to cease executors account, how much? 1,000 rupees. Now step 6, let us prepare the capital account. Start. Capital account of partners. Debit side particulars and 3 columns. Who are the partners? Who are the partners? A, B, C. Then for C it is like executor's account. For C it is like executor's account. Start. By balance brought down. By balance brought down, opening balance of capital 30,000, 25,000, then 16,000. Then by general reserve in the balance sheet will be transferred in old ratio. What is old ratio? 5:3:2 ratio. General reserve balance sheet. This 6,000 will be transferred in 5:3:2 ratio. How much it will be? How much? 3,000, 1,800, 1,200. Then let us come to the adjustments. By goodwill, entry pass பண்ணிருக்கோம் பாருங்க எவ்வளவு இருக்கு? 15,000. Journal entry, goodwill account data to partners cap. 9,000. By JLP, 5,000, 3,000, 2,000. Then by revaluation, 2,500, 1,500, 1,000. Last step, P&L suspense account. Only for C, 1,000. This is in step 6. Step 5. Okay. Take it up. You can take it up. No need to wait. Anything else to be adjusted? Anything else to be adjusted? Check பண்ணுங்க. Asset side la check பண்ணுங்க. Is there any loss? No. But there is a loan to C. Loan to C. How much is there already? That will be adjusted before settling the partner. So loan to C will be adjusted. Total amount 1,000. How much is paid to the executors immediately? Last adjustment la paranga. Adjustment number D. 6,200 is paid immediately. Remaining will be there in executor's account. It will be called as C's executor's account. It is a balancing figure for us. This will be settled in 4 equal installments in future. Not now. It is paid in what? Future. Then to balance carry down is a closing balance of others. This will continue in the balance sheet. Thousand of loan is adjusted. We pay 6,200 immediately. Remaining is there in which account? Executor's account. To balance carry down. 55,500 and what? 40,300. Next, prepare the balance sheet after death of the partner. Prepare the balance sheet after death of the partner. Capital account will come. This 55,500, 40,300 will come. C's executor's account. This 20,000 amount payable to C will come. Tell me what are the other liabilities. Perennial liabilities irukku பாருங்க. Only one other liability. What is it? Creditors how much? 12,000. Capital account of partners A and B will come. C's executors amount, unsettled amount will come. What is unsettled amount? 20,000 will come. Then creditors, there is no change, it continues. General reserve transferred to old partners. It is transferred to old partners. What will be the goodwill value? Goodwill, new value, 35,000. So the joint life policy will come, we got cash. Joint life policy will not come, we got cash. Next. Leasehold premises, already how much is given? 20,000 plus 5,000 appreciation, undervalued by. Then patents 6,000 plus 2,000 undervalued, so 8,000 will come. Then machinery 31,200, over valuation reduced பண்ணுங்க. What is over valuation? 3,200. How much will come? 28,000 machinery value. Then investments are sold. Whether investment will come in the balance sheet? No, investments are sold. Then stock. Any change in the value? 10,000. Any change in the value? No. Stock 10,000. Approve. Debtors 8,000. Then loan to see closed. Loan to see already we closed in capital account. Loan to see already we closed in capital account. Then yes, bank balance will change. Bank balance already 4,800 is there. Add investment sale பண்ணிருக்கோம். Investment sold for how much? How much? 4,200. Add JLP we realized. JLP ki cash வாங்கிருக்கோம். What is the JLP? Policy value we got. How much we got? 10,000. Policy value we got for JLP. Then less paid to C. How much is paid to C? 6,200 is paid to C. Balance will. But P&L suspense account will come. This is there in step number 6 or 5 or P&L suspense account at R2C's executors account போட்டிருப்போம். That will come till the end of the accounting. Over this one, pay attention. If you have not, you can copy it. Question number 11, I will try. Okay, after you complete question number 12. Question number 12 is like a class test, Madhuri. Okay, in the same model I have given the question. Question number which one? 12. There also it is joint policy only. There also it is joint policy only. You are going to try all the steps and prepare the balance sheet also. Okay, 15 minutes time to complete all the 7 steps. Learning takes time, but once you go for practice, wait for it. What is step 1? New ratio. What is step 2? Goodwill. Either you adjust in capital account or raise and write off. Third, joint life policy. Fourth, revaluation account, then profit share till the rate of debt. Prepare capital account and balance sheet. 15 minutes time, read and solve. Question number 1. 12. Try. Don't keep idling. Anyhow, I am going to solve this solution. Please try to work out. Question number 12. Which step you are in? What is the average profit? Average profit is how much? 10,000. 12,500. Good level of years. $12,500 into 3. First raise the goodwill and old ratio, then we'll write down. Old ratio raise பண்ணும்போது and write off a new ratio. Goodwill not appear in books கொடுத்திருக்கான். How to write off? Yes. எவ்வளவு டெபிட் ஆகும்? 3:2 ரேஷியோ. JLP reserve is not given, but surrender value is given 10,000 rupees. 6,000. What is the policy value? Balance? No reserve given in the question. Five is to 3 is to 2 ratio put at 12,000. $7,200, 4,000. Goodwill will be raised and write off because it is given in the question that goodwill should not appear in the books. Goodwill should not appear in the books. Revaluation account, which one is a gain in this question? Fixed asset ought to be depreciated by 10% to fixed assets. How much? 4,000. Bill found worthless na, bills receivable loss 1,000. That's it. By loss and revaluation 5,000 varum. P died on 1st August. So 4 months. How to work out based on based on previous year or last year profit. Just take 50, no need to take average profit. Based on previous year. Just take the last year profit and work out. What is the last year profit? 15,000. Calculate based on previous year, and a clear instruction is given to us. So 15,000 into 4 by 12 into 3 by 10. Plans executors 1,000. Then prepare the capital account next. Accounts closed on 31st December when P died 1/5. So this profit is calculated based on the last year. prepare the capital account and of course balance sheet. How much of goodwill is raised? SPF. எவ்வளவு goodwill raise பண்ணிருக்கோம்? In 750. Same thing is written out. Goodwill written off only for which partner? Isn't that? எவ்வளவு ரைட் ஆஃப் பண்ணிருக்கோம் பாருங்க. 22,500. Second partner died. JLP. எவ்வளவு ட்ரான்ஸ்ஃபர் பண்ணோம்? Step 3. 5,000. 12,000. Revaluation loss இல்ல. How much is paid to the plant immediately? Amount paid is given in the question. How much? 24,000. The balance will be transferred to P's executors account. Total balance? This will be paid in the future. For others, it will be like to balance credit. Check in the balance sheet if there is any loss to be written off, any loss or loan to be adjusted, nothing. What are the other liabilities that will appear? Joint life policy surrendered, cash at bank. Cash at bank எவ்வளவு இருக்கு? 4,000. Make adjustment for it. Joint life policy realized how much? 30,000. Any other asset sold? Like investment sold அந்த மாதிரி? Less paid to P. 24,950 is paid. See, one of the important thing that you have to understand is P&L suspense upon how much? 1,500 will appear till the end of the year. These executors are not paid now. Are they paid now or in the future? They are paid in the future. Remain as loan with firm at 9% interest. The 9% interest you have to pay maybe at the end of the year when you prepare the final accounts. Now it will just remain as loan. Completed the balance sheet. Please go through question number 11. What is the difference in question number 11? Asset side la parunga. Joint life policy surrender value is given together or separately. JKF. For each partner, the value is given separate. The value is given separate. 2,500, 2,500, 1,000 solely separate values are given to us. It's a several policy. Only thing that you have to keep it in mind is in the next question, for the deceased partner, you will get which value? Policy value. Others, you will get which value? Which partner died? Question number 11. F died. For F, you will get policy value. Remaining partners, you will get which value? Surrender value. All the other adjustments are same. All other adjustments are same. What is the ratio given? Profit sharing ratio. Any profit sharing ratio mentioned in the question? If no ratio is mentioned, you will go for equal ratio. Equal ratio. Try to work out step 1, step 2. I will join with joint life policy. Please try to work out step 1 and step 2. In the question, pay attention. Profit of earlier years. Last 5 years, but information is given only for how many years? 4 years. 1 year profit is missing. Take 2019 profit. Take the 2009's profit. 11,000. 2009 order profit is missing. Please take it 11,000. 2009's profit is 11,000. Ten, 11, 12, 13 is given. 2009's profit is how much? 11,000. Who are the partners? JKF. What is the old ratio? Equal ratio. If nothing is given, old ratio will be taken as what? Equal ratio. New ratio also will be equal. Goodwill, 1 year purchase of how many years profit? 5 years average profit. What is the average profit, please? What is the average profit? 20,000. Average profit is 20,000. Goodwill is valued at 1 year purchase. 20,000 into 1 will be 20,000 of course. But wait பண்ணுங்க. Balance sheet goodwill பாருங்க எவ்வளவு இருக்கு. Goodwill in balance sheet how much? 37,800. What is the new value or revised value? 20,000. So we have to increase the value of goodwill or reduce the value of goodwill? So reduce goodwill. Reduce goodwill by eவ்வளவு amount? 17,800. It is not goodwill written off. Existing goodwill is reduced by 17,800. What is the journal entry you will pass for this? What is the journal entry you will pass for this? Wait பண்ணுங்க. Today's first question, we increase the goodwill by how much? See, goodwill 35,000, balance sheet already 5,000, it's 30,000, where is what? ABC. You have to write off the goodwill, you have to reduce the value of goodwill by 17,800. What is the entry you will pass? J's capital account debtor, then K account debtor, F account debtor to which account? Goodwill account. இருக்கிற goodwill நம்ம reduce பண்றோம். It is not raised and written off. Existing goodwill itself is written off. So 17,800 divided by 3. For the other partner, maybe 1 rupee difference will come, add it. புரியல அது கம்ப்ளீட்டட். அது வந்து read a question. அது வந்து ஷேர் ஆஃப் ப்ராஃபிட்காக. குட்வில் என்ன சொல்லியிருக்கான் பாருங்க. Goodwill should be valued at 1 year purchase average profit of how many years? 5 years. இது என்னது? Point number F ல கொடுத்தது என்னது? That is how to work out share of profit of the 3 years. That is profit share till the date of death. That is not for goodwill. Joint life policy, is there any surrender value given in the balance sheet? Yes. What is the surrender value given in the balance sheet? JKF, surrender value எவ்வளவு கொடுத்திருக்கா பாருங்க. What is the surrender value given in the balance sheet? JKF. Separate policy, how much is given? 2,500, 2,500 and what? 1,000. By bank, for J you will get surrender value 2,500. For K also you will get which value? Surrender value 2,500. For F you will get which value? Policy value 1,000 divided by 10%. 1,000 divided by 10%. 1,000 divided by 10% will be 10,000. Tally this. The balance will be transferred to JKF. What is the balance? 9,000 transferred to partners. For J and K, you will get only the surrender value. For F, you will get which value? Policy value. This 1,000 is like 10% now. What is policy value? 10,000. Please remember, it is a joint policy or several policy? Several policy. This is the only difference between the previous question and this question. JKF already given in the balance sheet. Surrender value given in the balance sheet we have taken. JK, you get the surrender value. For F, you get which value? Policy value. Benefit will go to all partners in which ratio? Profit sharing ratio. Take it up. Revaluation account, what and all will come? By land and building, எவ்வளவு percent appreciation? 50%. How much? Land and building 50% appreciation. 37,000. Then which asset next? Investment valued 6% less than the cost. Investment பாருங்க எவ்வளவு இருக்கு? 10,000 into 6% போட்டா 600 வரும். 600 வரும். But investment fluctuation reserve இருக்கு பாருங்க. அதை adjust பண்ணணும். By investment fluctuation reserve. What is investment fluctuation reserve available in the balance sheet? 2000. அதில் loss in investment. This model we have done at the time of admission or retirement of a partner also. Wherever there is a provision available, the loss will be adjusted in provision. We maintain a provision of 2,400, 600 loss, balance 1,800. Then, what is the next one? Provision for doubtful, 20% சொல்லிருக்காங்க. To bad debts, 20% of debtors will be 20,000 le 20%, not 18,400 le 20%. 20,000 le 20% is 4,000 minus already we made it how much? 1,600, balance will come. 4,000 minus 1,600, how much? The additional bad debts to be created 2,400. Then, what is the next one? Stock to be reduced to 94%. So, for stock will be 6%. Reduced to 94%, which means the new value is 94%. The stock will reduce பண்ற amount 6%. எவ்வளவு amount? 1,200. Any other thing? Any other thing like investments are sold? No. Tally this, you will get the profit. It will be transferred to whom? JKF in the profit sharing ratio. Equal ratio, I hope. By land building 50%, by investment fluctuation reserve 2,400 like 600 loss we adjust, balance how much we take? 1,800. Bad debts 2,400, stock 6%. Profit is transferred to JKF. When is the last final accounts prepared? 31st? When is the last final accounts prepared? Check the question. 31/12/2013. When F died? 31st? 2014. How many months? 3 months. How to calculate profit for this 3 months? Based on average profit of 3 completed years. 3 completed years now. Take the reverse. This 20,000, 18,000, 28,000 by 3. 20,000, 28,000, 18,000, only 3 years average you have to take. Based on 3 years average. What is the average you are getting? 22,000 you will get. So 22,000 into 3 by 12, 3 months, into how not a share 1 by 3. Why 1 by 3? Share of F. See, goodwill is valued based on 5 years average. 5 years average is 20,000. Goodwill is valued based on 1 year purchase of 5 years average. But share of profit is calculated based on how many years? Based on 3 years average. Next, prepare the capital account. Who are the partners? JKF. By balance brought down. எவ்வளவு பாருங்க JKF. What is the opening balance? $60,000, 40,000, 40,000. Reserves, any old reserves? 8,000. It will be transferred in equal ratio. How much it will be? ₹1 difference வரும் third partner reduce பண்ணி. Joint life policy எவ்வளவு transfer பண்ணிருக்கோம் each partner? Joint life policy this one. P&L suspense for F1833. Goodwill written off. Entry number 2. Step number 2 la போட்டுருக்கோம் பாருங்க. Goodwill written off. How much? 5933. How much is paid to the FC executor's account immediately? கொடுத்திருக்காங்களா? Anything is given? Anything is given regarding amount paid to the FC executor? No. The balance can be taken as amount payable to FC executor. It will be paid in the future. Try to prepare the balance sheet of the firm after death. Creditors, there is no change rate, 25,800. Assets, tell me the balance of assets. Bank balance, 10,000 plus. JLP ki total money, how much is realized? JLP, look at step number 3. 2,500 plus 2,500 plus 10,000. How much we got for JLP? JLP. Surrender value for J and K, policy value for F. Eval amount JLP vandu. Nothing is paid to the other partner, so 25,000 appdi appear. Then 20,000 minus new provision 4,000, 16,000 will be the debtors balance. Then stock 94%, that is 20,000 minus on the 6% potome 1,200 put in over 18,800. Left 20,000 minus 1,200 18,800. Correct, Anit? Next, land and buildings plus 50%. That is 74,000 plus 37,000. 1,11,000 will come. Then investment sale pantama irukka. Investments minus 6%. 6,600 is adjusted. 9,400 will come. Then goodwill revalued. New value. What is the new value of goodwill? 20,000 will come. P&L suspense 1833 total tallies. With this, death of a partner is over. So what is the main difference between retirement of a partner and death of a partner? Number one, treatment of JLP, and which one? The profit share till the rate of death of the partner. Profit share till the rate of death of the partner.